I'm going to break down this EURCHF trade. You can see it's currently running for how much? For 1 to basically a 1 to 5 already. So let's break this down and how I took it and how you could catch these trades as well if you are going to watch this. I finally feel like my whole system's coming together. You know, in my previous videos, I'm obviously documenting everything, my losses, my wins, so I know where I've gone wrong, how I can iterate, and then so we can eventually make more money, right? And so the money will come. It's just getting the skill set first. So the skill set is the most important thing. So when I can start getting more consistent, you know, week on week, month on month, seeing I'm really hitting these trades, I'm really staying out of specific trades. You know, I only have my win rate on this on back testing is 80%. However, obviously that's back testing, that's not live tested. So I know this system has an edge. I just need to be the edge as well. And how do I be the edge? Well, I need to be patient. I need to be disciplined. I need to listen to my rules. I need to stick to my risk. But before I even take any trades on a challenge account, I'm going to make sure I'm consistent for a few months because I'm trading another challenge account right now with a different system. But ultimately, this is the system I do want to use. So yeah, let's go to it. So monthly, we can already see we are extremely bearish. You know, EURCHF. So if you're not familiar, this is the euro against the Swiss franc, CHF. And you can see since, wow, however long this chart goes back from 1972, we've clearly been in a downtrend. So this thing is just heading lower and lower for the past 40, 50 years. But obviously we're swinging it for a week or 2 days, so we're not really interested in position trading it for months or even years. So monthly we're bearish. Weekly, we can already see we're making lower highs and lower lows. So let me draw this out for you if this doesn't make sense. Let's change this to white. So the reason we're bearish is because you can see price here came down, lower high. So this is the lower high, this is the low, and once we break below this low, we're confirmed to be bearish. Well, we already are bearish, but we're still bearish. And then we just see price breaking below, come back up, break below, come back up. If it doesn't break this high, we're still bearish. Again, it doesn't, so we confirm it. So we're just continuing the momentum down. It's pretty much like a wave. We're surfing a wave. Why would we go against the trend? The trend is clearly showing this is going down on the weekly time frame, right? So if I just put this here, you can pretty much see that it matches it exactly. Let's change this color so you can see it properly. Clearly bearish, right? Lower high, lower low, lower high, lower low, lower high. So we're anticipating for this area to become a lower high. Let me mark this area out where. So we're anticipating this area to be the lower high point. Similarly, just like this area was, again, just like this area was. So this is just structure where we're clearly creating lower highs. Lower high, lower high, lower high. This is the lower low. This is the lower low. We're going to create the lower high here. Okay, so cool. We can clearly see we're interested in this zone. So then we drop to the daily. So we've got monthly bearish, weekly bearish. So that's a good sign. We can drop to the daily and we can see we're pulling back. So I like how we broke below. So what we like to see is price obviously came up here, came down, confirmed because we broke below here, came back up, lower high on the daily as well. Again, continued the bearish momentum, so sellers were in control, came back to this area, and then also probabilities of price bouncing from this area, very high. We can see it bounced here, and it bounced here as well. So you have one interaction, two interactions, three interactions with this zone, so it's a valid zone. So what's the probabilities of price breaking above and creating a higher high. Think about that. Low. It's the probability is low, right? So the probability of price bouncing off and going lower is a lot higher. So again, probability wise, we're going to head lower. It's so simple. So now we head to the H4 and we look for our entry confirmations. But I mean, just look how clean this zone is. H4 are waiting to flip bearish as well. So we obviously are, I mean, this is picture perfect. This is a textbook trade, absolutely textbook. And it wasn't on my watch list because I hadn't backtested EURCHF. However, I'd marked this out and then I went to backtest it. The reason I hadn't backtested it initially is because I wanted to stick to, you can see here, I wanted to stick to around 10 pairs. But then I found that other pairs were also moving very well. I don't trade these pairs. Some other pairs were also moving very well. And if I can have a wider list of pairs and be even more selective, then that would be good. For example, a really good pair to trade is GBP USD, one of the most liquid pairs in the market. But look at this. This is horrible. I mean, on the H1 it looks cleaner, but on the daily, this is disgusting. I do not like this at all. Not clean. There's no clear direction. Obviously there's market structure, but why would we trade this when we have this, when we have this, when we have this? You can see there's clear direction with these pairs, right? But with GU, there's no direction. We could take shorts, we could take longs, but then you're just gonna get stopped out, or it might just hit your TP and it's not a clean move. So we're not really interested. So coming back to EURCHF, we waited for price to hit this area, and then we waited for a structure shift on our lower time frames. So H4, I like how we bounce off of this. So for example here, we created this high, had a rejection, created the high. So if you were to take sells here, you would have got stopped out here because people that were too impatient, again, this is why my system installs patience, is because we can't just take the sell as soon as it hits here. For example, if we set sell limits at this zone and put our stops just above, we would have stopped out immediately. But we would have been right in the direction, but wrong in the trade. So again, we're waiting for structure to shift. Waiting. Boom, execute. Why? Because you can clearly see that we're getting in on this H4 lower high after it's broken the low. So we're clearly bearish because here we were bullish on the H4 because we were just creating higher highs and higher lows. So we were bearish, flipped structure here because we broke this, and then we just headed up, right? So we were waiting for H4 to flip bearish, and then we got in. So this is probably one of the best examples of a trade in terms of being more textbook. And then again, waiting for the lower time frames to shift. Just so clean. And then if we go and play replay mode, let's get rid of this. Boom. So this shift happened on Wednesday. Again, last week was slow as well. So considering this move happened on Wednesday, it's more surprising, but that just shows that market structure is pretty much king. Like, you don't really need indicators. I do have this to help me show where momentum's going. So it does show that momentum was more likely to bounce off. So again, it's just another confluence. Again, my other confluence is here. So another confluence. So, and to be honest, it's just, and actually, I don't know if you've seen this, but we also are divergent here from those two waves to price. So from here to here, whoops, from here. So we're very divergent on here. Price has made a way higher high, and this has made a lower high on here. So again, more confluence on this. So there's just reasons to add up. There's reasons stacking in favor of this trade. So let me just carry on playing this replay mode. And the risk to reward as well was so juicy. So it's a 1 to 5. Say we were to exit here at a 1 to 5, whoops, then we were risking, so it's 26 pips, but it doesn't really matter the pips, it matters the risk to reward ratio. So we were risking, say, $1,000, $100, $1,000 to make 4,980, just say 5k. So we were risking 1 grand to make 5 grand. Isn't, and then that would pass nearly half of a prop firm challenge. In how long? We entered it last Monday and it's now Monday. So in 7 days you would have made 5%, more than enough. And then you just would have waited. It's almost like you're a hunter in the woods and you have a sniper and you're just looking and scouting, and most of the time you're sitting on your hands waiting and waiting and waiting. And when the opportunity comes, boom, we take it. If it doesn't, it doesn't. And the best thing about these high risk to reward ratio trades is that we'd have to take 5 losses to make this 1 win back. Think about that for a second. So the win accuracy doesn't even matter. This is one thing I struggled with early on in my trading journey and career, is I thought, I needed an 80-90% win rate. That's completely false. You don't need an 80-90% win rate. The best traders probably have between a 50 to 60-70% win rate max. These guys that are posting 80-90% win rates, I've been in their groups, I've followed them for years, and their trades are so subjective and they've been looking at charts for so long that there's no there's no objectivity behind their trade. It's, I've seen this before, I feel like it's going, there's a lot of emotions attached to it, and it's very hard for other people to replicate, getting 90% win rates. A better scenario is to go for a 60% win rate with a risk reward of 1 to 2. It's less stress, you're going to be profitable in the long run, you're not going to have a long journey and trying to figure out where you went wrong, because trading already has million variables. Why are you trying to add more variables? In my system here, you can see I have a very limited amount of variables, and when it goes wrong, one of these however many variables I have wasn't showing, and then I make a note of it. But when these people are posting 90% win rates, it's because, if it didn't reject here, it's because no closure was here. Like, how can you make that systematized? There's no system behind it. There's just, let's a cop out for a mistake here. Maybe it works for them, great. However, for 90% of the people watching, it won't work. I think this system works for me personally because I've iterated it and it's simple, it's methodical. There's a process behind it. So, like I said, the risk to reward is extremely important. 1 to 5. We would have made 5% in 1 week. Ridiculous. So we just want to wait for the opportunities to come. And when they come, boom, we take them. If they don't come, we don't come. We sit on our hands. Some weeks there will be no trades. Last week there was loads of trades that came up. But this trade happened to be those ones where it really hit. It really hit. So let's see what session we entered on. Oops. Yeah, so we entered on, so we even entered in London, early London session. So again, I think the entry was here, or here. No, it's here. Waiting for that structure shift. But again, went into drawdown. Look, we went into profit, then we were in drawdown. And this is where most people would get really anxious. I mean, if you see this live, I remember how I felt back in the day when I saw, as soon as I enter a trade, it goes into profit and then immediately comes to a loss. And look, we were already at halfway towards stop loss. So if you risk $1,000, you would be minus 500 in the first 4 hours, in the first 5 hours. Obviously, you're going to be thinking, well, what the hell's going on? But because we trust our analysis and the probabilities of the time frame, higher time frames pointing downwards, show that even though this is an intra-session play, probably a liquidity grab here, you can quite clearly see even a perfect liquidity grab actually, or London high and Tokyo high. This just comes down to experience. a liquidity grab, and then probably we're going to get a move off of it. So all these imbalances and all these structure shifts, they don't really matter on the lower time frames because we know overall we're going to head down. Our entry doesn't have to be perfect because we're going to be right most of the time, because we're taking a lot of time frames into consideration. We're just going with the wave. So if the wave's going down, we're going to go with the wave. It's very simple. So then, by the end of New York, it pushed down, and then London, it pushed down even more, and then New York, it's having a pullback. So I really like this trade. It's a very good trade, textbook. So hopefully I provided some sort of value in this. Hopefully you did learn a thing or two. But one of the most important things, like I said, I'm going to do more videos on risk management and psychology, because technicals, once you get the technicals down, it just comes down to the rest. So like I said, risk to reward is ridiculous. We'd have to lose 5 trades in order to get back to break even. And to be honest with you, we can even hold this. So you could take partials at 1 to 2 and then hold the rest. But because we're pushing down, the probabilities of price breaking this, that could happen, or we could get a bounce off of it. So if you take partials at 1 to 2 or 1 to 3, and then you hold for even further for a lower low, but I wouldn't do this because there's no data going back. We haven't, since 1972, well, this is the lowest we've ever been. So here, on the start of January this year, it's the lowest we've ever been. So personally, I'd probably take my profits here and then let price do what it wants to do. It could just come down, bounce, 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 come back up, bounce, come up, break it and go higher. Or it could do this. Let's change this color so it's clear. Could do this. We could come down, a little lower, higher, internal structure, probably consolidate a lot here, nice accumulation zone, break above, boom, confirm the break below, took the liquidity up here, and then just create a lower low before we create a new higher, lower high here to then head lower. But again, we're not trying to hold this for months or years, so we're happy with the move that happened in the week, and we take profits at 1 to 2 and then hold the rest for partials. So hopefully you got some value out of this video.